Jerome Powell gave a speech today. He was in Rhode Island. I had a couple quotes, but that gives us a bit of insight of his stance, where himself and the rest of the Federal Open Market Committee are. It says this policy stance, this is a quote, this policy stance, which I see as still modestly restrictive, leaves us well positioned to respond to potential economic developments. The policy statement, obviously referring to reducing the Fed funds rate by 25 basis points. What I'm pulling out here is that even that reduction of 25 basis points, he's still seeing as moderately restrictive, which would indicate that we would see additional rate cuts. The market is pricing in 2 additional 25 basis point rate cuts throughout the year, although there is some talk that maybe those don't happen. The other quote, near-term risks to inflation are tilted to the upside, and risks to employment to the downside. A challenging situation, he said. Two-sided risks mean that there is no risk-free path. That was actually my favorite quote. In Jerome Powell, he will drop some banger quotes, and this is just so universal. Two-sided risks mean that there is no risk-free path. And I would argue in most cases in investing or in life that we're often facing two-sided risks, the two sides of the coin, double-edged sword. And it's true. There's no risk-free path. There's no risk-free path in life. It's just we have to acknowledge that and accept it. Going on, quote, the increased downside risks to employment have shifted the balance of risks to achieving our goals. This policy stance, which I see as modestly restrictive, leaves us well positioned to respond to potential economic developments. Continuing, uncertainty around the path of inflation remains high. We will carefully assess and manage the risk of higher and more persistent inflation. We will make sure that this one-time increase in price does not become an ongoing inflation problem. That would seem to say, hey, we know that we might see a little bump up of inflation because of tariffs, but we can handle it. It's not going to be that big of a deal. Everyone just calm down. Earlier Tuesday, which is the day we were recording this, September 23rd, Fed Governor Michelle Bowman warned about the dangers of moving too slowly to address the labor market. Bowman, a Trump appointee, said, and I quote, we are at a serious risk of already being behind the curve in addressing deteriorating labor market conditions. She goes on to say, I am concerned that the labor market could enter into a precarious phase, that there is a risk that a shock could tip it into a sudden and significant deterioration. All this at a time when the S&P 500, the stock market, essentially is at an all-time high, leading to concerns of a potential pullback and a relatively fragile situation of so many eggs in the basket of AI, but also the Mag 7, 7 very large technology companies that have a concentration of capital and a change in the narrative of the story, whether that be related to AI and the promises of productivity, or just a huge wrinkle in earnings related to the Magnificent Seven companies. Really, even just any few of those could lead an entire market downturn in some sort of correction in the 10 to 20% range. In my opinion, may even be healthy. We're already exceeding the price targets for the S&P 500, according to many of the major investment banks. And so when we're looking at a situation of where unemployment is potentially weakening, it doesn't necessarily track that the stock market is at all-time highs, unless the market is indicating, as it is a forward-looking indicator, that we are going to work through some of these problems at some point. Until the narrative changes and the fundamentals change, that's going to be the underlying theme. So on one hand, fundamentals look shaky. Fundamentals in terms specifically employment. The market's trying to look past it. I think the key is, from my perspective, this is where the optimism comes in, is that if uncertainty can be reduced, which is much easier said than done, we might be able to give that confidence to business owners to be able to continue hiring, continuing their plans for growth, and achieve this soft landing that has been in the works really since 2022. I think we could still do it. We haven't absolutely broken the economy yet. Things are out of balance, but we'll never get to a perfect balance because we're not a perfectly efficient market.